Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
Want to turn smart investments into real wealth? In this episode, we break down Mastering Capital Gains, a guide to wealth building. Get ready to unlock the secrets to growing your fortune.
Hey everyone, welcome back. Today, we're diving deep into capital gains.
All right.
Yeah, capital gains. We've got this awesome guide all about building wealth through smart investing.
Oh, nice.
And we're going to break down all the essentials, the do's and don'ts, so you can really master this stuff.
Cool.
But get this.
Okay.
Did you know that holding an asset for just one extra day can totally change your tax situation?
Wow, really?
Yeah, it's crazy.
I did not know that.
That's the kind of insider knowledge we're after today.
I like it.
Yeah.
So it really all comes down to, getting that difference between short-term and long-term capital gains.
Right.
That's really the core of a good capital gains strategy.
Okay, let's break that down.
Sure.
I feel like we've all heard capital gains a million times.
Right.
But a little refresher never hurts, right?
Oh, absolutely not.
Yeah.
At its core, a capital gain is just the profit you make
Okay.
when you sell an asset for more than you paid for it. But the real magic happens when we see the difference between short-term and long-term gains,
Okay.
especially when we look at taxes.
Taxes, yeah, that's where it gets interesting.
Yeah.
So short-term gains are like those quick wins.
Yeah, you got it.
Right.
Short-term capital gains, those are when you sell something you've had for less than a year.
Yeah.
So think like flipping a house or selling some stock you bought a few months ago.
Okay.
And these gains are taxed at your regular income tax rate,
Okay.
which can be way higher than the rates for long-term gains.
So it's kind of like getting a bonus at work.
Uh-huh.
Super exciting at first, but then you remember,
Yeah.
oh, taxes.
Yeah, the tax man comes for his share.
Oof, exactly.
Exactly. But with long-term capital gains, so that's when you've held something for more than a year.
Okay.
The tax rates are usually much, much lower.
Oh, wow.
And this really encourages investors to think long-term, the whole buy and hold approach, which
Oh.
of course Warren Buffett is, famous for.
Yeah, speaking of Warren Buffett.
Isn't his whole thing like buy a company and hold it forever?
Exactly.
Long term. He's a perfect example of how patience and a long-term view
Yeah.
can lead to, some really incredible wealth building
Wow.
by riding out those market swings and giving your investments time to grow. You don't just benefit from that compounding,
Yeah.
but you also pay less in taxes.
Right.
It's a win-win.
It is a win-win.
Yeah.
This makes me think about all those times I tried to jump in and out of investments really quickly,
Yeah.
and I ended up either losing money
Yep.
or paying way too much in taxes.
It happens.
Ugh, felt like a recipe for disaster.
It often is.
Yeah.
Chasing those quick gains can be so tempting,
Yeah.
but it can lead to, emotional decisions
Oh, yeah.
and impulsive actions, which really hurt those long-term goals.
Right.
It can really sabotage you.
So slow and steady, huh?
Slow and steady
Got it.
wins the race.
Okay. Yeah, but hold on. There are so many different investments out there. I mean, stocks, real estate,
Mm-hmm.
even things like crypto.
Oh, yeah.
How do we choose what to put our money into for the long haul?
That's where diversification comes in.
Okay.
And it's not just about, spreading your money around. It's about really understanding each type of asset
Okay.
and figuring out how to allocate your money
Uh-huh.
based on, your risk tolerance, your goals, and how long you want to invest for.
So it's not just throwing darts at a board,
No, not at all.
hoping something sticks.
Nope.
Okay. We need a real strategy.
Strategy is key.
Got it.
Yeah.
Our guide mentions some interesting examples.
Okay.
Stocks and real estate are the classics,
Yeah, those are the big ones.
right? But it also talks about starting your own business
Oh, interesting.
and even investing in art and collectibles.
Yeah, you can definitely diversify that way.
Wow.
And that's where risk-adjusted returns are important.
Okay.
For example, stocks can grow a lot, but they can also be really volatile.
Right.
Whereas real estate, that might be more stable,
Okay.
but it might not grow as fast.
So we need to find that balance, right?
Exactly.
Risk versus reward.
Finding that sweet spot.
Got it.
Yep.
And the guide really emphasizes research,
Yes,
due diligence before we invest in anything.
absolutely. Don't just jump into the latest trend
Yeah,
because
okay.
everyone else is
Right.
really dig into the fundamentals of any investment
So basic.
before you commit your money.
Avoid those get-rich-quick schemes.
Exactly. Those are usually too good to be true.
Yeah, they always sound a little fishy.
They do.
Okay, so research.
Yes.
Avoid the hype.
Absolutely.
Check and check.
Double check. Yeah.
All right, so let's say we've done our research.
Okay.
We've got a good diversification strategy going on.
Good.
And we're in it for the long haul.
Perfect.
Where do we find those capital gains opportunities?
All right.
You know, the ones that have the potential to, like multiply our wealth.
You're going to want to look at high growth sectors,
Okay.
the ones that line up with those long-term economic trends and address real needs.
Okay.
Our guide highlights some really cool areas
Yeah.
like technology, renewable energy, and healthcare.
Oh, those do sound promising.
Yeah.
I'm kind of intrigued by the whole technology sector.
Yeah.
I mean, think about how much our lives have changed
Mm-hmm.
just in the past few years
Yeah.
because of stuff like artificial intelligence, cloud computing, and all that cybersecurity to keep our data safe.
It's amazing, right?
Yeah.
And those are all massive industries with huge potential.
Wow.
And they're only going to become more important as tech keeps advancing so fast.
So we're basically betting on the future
In a way, yes.
by investing in these high-growth sectors.
You're aligning your investments with really powerful trends that are shaping the world and are likely to keep doing so for years to come.
Wow, that's exciting.
It is.
But
Yeah,
I have a feeling there were some, common mistakes we need to avoid.
absolutely.
Like, what are some of those capital gains traps
All right.
that we could fall into, even if we're doing everything else right?
Yeah, great question.
Okay, so we've covered a lot of ground, long-term gains,
Yeah,
diversification.
right.
We've even found some high-growth sectors.
It's all coming together.
Just like we have a pretty solid foundation
I think so.
for success with capital gains.
Yeah.
But you mentioned these pitfalls.
Oh, yeah, yeah.
What are some mistakes people make?
Well, one of the biggest ones is just getting caught up in the hype.
Oh, yeah,
It's really easy to get swept up in the excitement
for sure.
of like the latest meme stock or, the newest cryptocurrency.
Right.
But those often don't have the fundamentals to
Yeah.
support long-term growth.
Okay.
You really want to look at that.
I've definitely been guilty of that fear of missing out, the FOMO.
Oh, yeah, we all have.
Yeah.
It's a powerful force.
Yeah. So it sounds like we really got to resist that urge.
Absolutely.
Stick to our research and our plan.
Stay the course.
Yeah. Okay.
Yeah, another really important thing is having a risk management plan. And this isn't just about avoiding losses, but about protecting your capital.
Right.
One good strategy is using stop-loss orders when you're trading stocks.
Okay. So those automatically sell your shares if the price drops too low.
Exactly. It's like a safety net.
I've heard of those, but I'm not really sure how to use them.
Yeah, they can be a little tricky. It
Yeah.
really depends on how much risk you're okay with
Right.
and the specific stock you're trading. But a good rule of thumb
Yeah.
is to set your stop loss a certain percentage below what you bought it for
Okay. That makes sense.
so that you're comfortable with, potentially losing that much.
Right.
Some people use these like fancy technical analysis things
Oh, wow.
to figure out their stop loss.
Okay.
But it's all about finding what works for you.
Right. Finding your own style.
Exactly.
Okay. So stop loss orders. Got it. What other risk management stuff should we think about?
An emergency fund.
Oh, right.
Never underestimate how important that is.
The good old emergency fund.
This is your cushion for the unexpected.
Yeah.
Like losing your job or medical bills.
Nobody wants to think about that stuff.
I know, but you got to be prepared.
Yeah. True.
Keep that money separate from your investments.
Okay.
And aim for at least, 3 to 6 months of living expenses.
Okay. So that way, if something happens,
Exactly.
we're not forced to touch our investments.
You got it.
Okay.
That could really hurt your long-term growth.
Okay. That makes sense. So speaking of curveballs, taxes.
Oh, yeah.
Taxes are a big part of this capital gains thing. What's your advice on how to deal with them?
Well, tax-advantaged accounts
Okay.
are a great way to keep more of your gains.
Got it.
Things like Roth IRAs and 401ks.
Yeah.
Those can really help you build wealth over time.
Okay. Let's unpack those a little.
Sure.
I always get them confused.
Yeah, it's easy to do.
So what are the main differences?
All right. With the Roth IRA, you put in money you've already paid taxes on.
Okay.
But, and this is the cool part,
Okay.
when you take the money out in retirement,
Yeah.
you don't owe any taxes on it.
Wait, seriously. Tax-free.
Completely tax-free.
That's amazing.
It's a fantastic tool.
So all those years of growth and compounding,
Yeah.
that's all mine to keep.
All yours.
No big tax bill.
No taxes.
Wow. Okay, Roth IRA, I'm liking the sound of that.
It's a great option.
What about 401k?
So traditional 401k,
Yeah.
Those usually come through your employer,
Okay.
and they have a different kind of tax advantage.
Okay.
You put in pre-tax money, so
Excellent.
you get a tax deduction right away.
Right.
It lowers your taxable income for the year,
Okay.
and your money grows tax deferred,
Uh-huh.
and then you pay taxes when you take it out in retirement.
Got it. So you're basically delaying the taxes.
Exactly.
Okay, interesting. But what if my employer doesn't offer a 401k?
Or if you're self-employed. Right. What then?
There are other options like solo 401ks
Okay.
or traditional IRAs.
Uh,
They have those tax deferred benefits too.
cool. So there are always options.
There are. You just got to find what's best for you.
Yeah, do your research.
Exactly.
Okay, so many tax-saving things.
I know, right?
I love it.
It's good stuff.
The guide also mentioned this thing called tax loss harvesting.
Oh, yeah.
Yeah.
What is that?
So that's when you sell investments that have lost money
Okay.
to offset the gains you made on other investments.
Hmm.
So it can lower your overall taxes for the year.
So it's like making the best of a bad situation.
Yeah, kind of.
Turning lemons into lemonade.
Exactly.
Yeah.
You're using those losses strategically
You're
to
right.
improve your tax situation.
Got it. I've heard about these wash sale rules, though.
Oh, yeah, those are tricky.
Do those mess things up?
Yeah, you got to be careful.
What are they exactly?
They basically say you can't claim a loss
Okay.
if you buy the same thing or something really similar. Yeah.
Within 30 days before or after selling the losing one.
So I can't just buy back the same stock at lower price
Right, that's a wash sale.
and then claim a loss.
Exactly.
Okay, so my replacement investments have to be totally different.
They do. Got to make sure it's a genuine change.
Gotcha.
And always talk to a tax advisor.
Like, always good to get professional advice.
Make sure you're doing things right.
Yeah. Okay. So we've been talking a lot about individual investors.
Yeah.
But I'm thinking about the bigger picture.
Oh, okay.
Like all the stuff that shapes the market
Oh, yeah.
and affects our strategy.
The market forces.
Yeah. What do we need to know about that?
Well, it's like sailing. You got to understand the winds and currents
Okay, I like that analogy.
to navigate effectively.
Yeah.
Market cycles, interest rates, inflation,
Right, right.
those all play a big role.
Okay, Captain, guide us through these waters.
All right, let's start with market cycles.
Okay.
These are basically periods of growth and contraction in the economy,
So think of it like a wave with peaks and troughs.
like a roller coaster.
Exactly.
Okay.
When things are expanding, everyone's optimistic.
Right.
Businesses are doing well, investments are up.
Makes sense.
But eventually, that growth slows down
Yeah.
and we get a contraction, maybe even a recession.
Oh, right.
Things slow down, people might lose jobs.
That sounds scary.
It can be, yeah.
Yeah.
And investments might go down.
So it's like this up and down thing,
It is, yeah.
just like a roller coaster.
Exactly. And just like on a roller coaster, you don't want to panic during those drops.
Right. Don't jump out.
I gotta ride it out.
Hold on tight.
Remember our long-term mindset.
Right. Stay the course.
The market tends to go up over time.
Okay. Good to remember.
Now, interest rates also play a big role.
Okay. Those are always changing.
They are, and they represent the cost of borrowing money.
Right.
So when interest rates are low, it's cheaper to borrow,
Yeah.
which can boost the economy and make asset prices go up.
So low interest rates are good for investors.
Generally, yes.
Okay.
It can be a good time to invest in things like real estate.
Makes sense.
But when rates go up, borrowing gets more expensive,
Right.
and that can slow things down, maybe even cause asset prices to drop.
So it's like this delicate balance.
It is, yeah.
Low rates can help us grow, but if
Mhm.
they get too high, they can kind of put on the brakes.
Exactly.
Okay, what about inflation?
Inflation, the big one these days.
Yeah, it's everywhere.
So inflation is basically how much prices go up over time.
Right, I've definitely noticed that at the grocery store.
Oh, yeah, we all have.
My dollar just doesn't buy what it used to.
That's the thing about inflation.
Yeah, it's sneaky.
It erodes your purchasing power.
Okay.
And this is where capital gains investing is so important.
Oh, so.
If you invest in things that go up in value faster than prices are rising,
Yeah.
you can actually stay ahead of inflation.
Oh, so it's like a race.
In a way, yes.
My investment's got to grow faster than prices are going up.
Exactly. You got to beat inflation.
Okay, so how do I choose investments that can do that?
Historically, stocks, real estate, and commodities have done well during inflation.
Okay.
But remember, past performance doesn't guarantee future results.
Right, right. Always got to be careful.
Always have to do your research.
Okay, so market cycles, interest rates, inflation.
Yeah.
We got to be aware of all these things.
And be ready to adjust your strategy.
So just setting it and forgetting
You
it?
know, not with capital gains.
Okay, Got to stay active.
You got to stay informed, read the news, follow the economic indicators,
Right.
and be ready to adapt.
So we're like those sailors again,
Exactly.
constantly adjusting our sails.
To navigate those changing winds and currents.
Love it. Okay, we've covered a ton of ground,
We have.
but there's one more thing.
What's that?
Exit strategies.
Ah, yes.
The end game.
Knowing when to sell.
It's just as important as knowing when to buy.
Okay, let's talk about that.
All right.
All right, so we've got our long-term mindset.
We're diversifying.
Good.
We're even starting to understand those big market forces.
Right.
But now it's time to talk about actually selling,
Okay.
cashing in on those capital gains.
Yeah. How to exit?
So what does a successful exit strategy actually look like?
Well, it's definitely not about panic selling.
Yeah.
You know, when you see the market dip a little,
Right.
it's more about having a plan
Got it.
for when and how you'll sell your stuff.
Okay.
And you got to consider your goals, market conditions,
Yeah.
and of course taxes.
Taxes, right. They always come back.
They always do.
So it's not about like reacting emotionally to the
Yeah.
market.
No, not at all.
It's more about having a plan.
Exactly. Being proactive.
Okay. Like having an escape route
Yeah, like
before you even enter a building.
that's a great way to put it.
Right.
Yeah.
So where do we even begin with this plan?
Well, like with any good plan, you got to know where you're going.
Right.
So what are your financial goals for these investments?
Okay. So
What are you trying to achieve?
like, are we saving for retirement
Uh-huh.
or a down payment on a house
Could be.
or maybe like funding a dream project?
Exactly. It could be anything.
So those big goals
Yeah.
are like our guiding light.
They're your North Star.
Right. That keeps us from making dumb decisions
Exactly.
based on like short-term market stuff.
You don't want to get swayed by those daily ups and downs.
Right. Got to keep our eyes on the prize.
Absolutely.
Okay. So we know our goals.
Good.
What's next?
Now we map out the route.
Okay.
And that means setting things like profit-taking points.
Right. And stop loss points.
Yeah. We talked about stop-loss orders
Yeah.
to limit those potential losses.
But profit taking is kind of the flip side.
It is, yeah.
Right.
It's just as important.
Yeah. And that's where discipline is key, right?
Oh, absolutely.
It's so tempting to just hold on to a winning investment forever.
I know. We all want to ride that wave as long as possible.
Right. Hoping it'll just keep going up.
Yeah, but you got to know when to walk away.
Yeah. And take those profits.
That's the key.
So how do we fight that temptation?
Greed is a powerful emotion.
It is.
It can really cloud your judgment.
Yeah.
But if you set those profit-taking points ahead of time,
Okay.
then you're making rational decisions.
Right. Not emotional ones.
Exactly. You're sticking to your plan.
Okay. So we've got our goals,
Uh-huh.
stop loss orders,
Yeah.
profit taking points.
Yeah.
What else should we be thinking about for our exit strategy?
Taxes.
Taxes again.
Can't forget about those.
Yeah, you're right.
When you sell something for a profit,
Yeah.
you might have to pay capital gains taxes.
Right. Right.
And the timing of your sale can make a big difference.
So how can we time things strategically?
Well, for example, you could sell in a year
Oh,
when your income is lower,
okay.
or you could use that tax loss harvesting strategy
Right.
to offset those gains.
So many ways to save on taxes.
It's all about planning ahead.
Okay, I like it. Now, you mentioned these tiered exit strategies.
Oh, yeah.
Can you remind me what those are?
So imagine you've got an investment that's doing really well,
Okay.
but you're not sure if you should sell it all at once
Right.
or hold out for even more gains.
Like a tough decision.
It is.
Yeah.
A tiered exit strategy lets you do a bit of both.
Oh, okay.
Instead of selling everything at once,
Yeah.
you sell parts of it at different profit levels.
So it's like having multiple exit ramps
That's a great analogy.
on our investment highway.
Yeah.
We can take some profits now,
Uh-huh.
but let the rest ride.
Exactly. You get the best of both worlds.
I like it.
You lock in some gains,
Yeah.
but you still have the potential for more.
Okay. That makes sense.
Hmm.
Wow, this whole capital gains thing.
It's a lot, right?
It's more strategic than I thought.
It definitely is.
It's not just about picking stocks and crossing your fingers.
No, you need a plan
Right.
for every step of the way.
This has been so helpful.
I'm glad to hear that.
I feel like I can actually do this now.
You can. I believe in you.
Any final words of wisdom?
Stay curious, stay informed, never stop learning.
Okay.
The world of finance is always changing.
Yeah, that's true.
The best investors are the ones who keep learning.
Fantastic advice.
Yeah.
And everyone listening, thank you for joining us.
Yes, thank you all.
We hope you learned a lot
I hope so.
and are feeling ready to level up your investing.
Absolutely.
So until next time,
Happy investing.
and remember, the journey doesn't end here. Keep learning, keep growing.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.